It is Thursday evening, you're watching Australia's Business Channel, and that of course means you are tuned into Shares Night here on Your Money, Your Call. It's great to have your company. I'm Nina May. I do hope you've been enjoying the show so far. I'm going to go straight to our next caller. I'm going to go to Perth, and we're talking to Brian now. Hi, Brian.
Hi, how are you going?
Hi, good, thank you. Thanks for joining us.
Thank you.
What's your question for my panellists this evening?
Yeah, just got a question. I've been watching First Australian Resource shares, code FAR there, for the last few weeks, sort of hovering around the 6 to 7 cent mark. Just some news of a joint venture, which sort of came out there this morning. Just wanting to know what the panel's opinions are on those shares and what that may do to the price.
Roger, First Australian Resources, FAR is the stock code.
Imagine I said to you, we're going to start a business with $26 million 10 years ago, and we're going to keep putting money in such that we've now put in a total of $72 million, and we've never made a profit, or we haven't made a profit for a long time. That's this company. Okay. I can't give it a value of more than zero. It may indeed have bright prospects. And this joint venture that's being talked about may indeed, something valuable may come of that. But until there's a demonstrated track record of profits and profitability, I can't value it. I've got a zero valuation.
I'm going to Sydney now with Lucian on the line. Hi there.
Good evening.
Good evening to you.
Thank you very much for accepting my call.
Very welcome.
For some time, there have been media reports that property sector, in the large meaning of this term, has finally bottomed. I would appreciate the panel's view on the Brisbane-based company, FKP. It develops, owns, and manages retirement villages. Thank you.
Thanks for your call. FKP, the stock code for this one, not surprisingly, FKP Property Group is the company, currently sitting at about 86 cents. Roger. It's
a shadow of its former self, this company. It used to have an intrinsic value of close to $8, and its intrinsic value now is closer to 30 cents, rising to 50 cents and 64 cents. So this business's current share price is above its current intrinsic value and arguably above what the intrinsic value of the company will be in 2 years' time. Its quality has been, it was once a wonderful business, sort of before 2005, prior to 2005, it had a very strong balance sheet and it was arguably a very good business. That's now changed and for me it's not investment grade. I just add, I think that's going to be the case while all that debt that it has is there, and while that debt remains, it's going to be very difficult for this company to actually generate low risk returns. And that's the problem. I think that's why your chart's showing, that it's not going anywhere. The intrinsic value is not going anywhere, and it's got too much debt. It's too high risk.
Sean from Queanbeyan is our next caller. Thanks for waiting, Sean.
Thank you, Nina.
Thank you. What's your question?
Just wanted to ask the panel about Nufarm, NUF. I recently bought some just under the $8 mark, and I just wanted a technical and a fundamental. And also, if there's time, I was reading today that the National Health and Hospitals Reform Commission want to start setting up medical centres as part of the new government reforms. I'm wondering if this goes through, how will it affect some of the mid-tier healthcare stocks that operate in those areas? Thanks.
Okay, that's an interesting question, actually. Roger, I might ask you that one.
I think we would have been better off as a country if we'd got rid of state governments than the current health package that we now have. It hasn't gone far enough to truly be called reform. Essentially what we've got
Get rid of state governments as an entity.
We've got too many tiers of government in Australia.
So just have federal and local?
Federal and regional governments, but not state governments. The bureaucracy that's created has done nothing except fund bureaucrats. And that is a real problem for our country. And we've got so many bodies in health and education replicating their jobs that, and we're no better off now under these new reforms. We've got the state governments now in control of money, more money than what they had before. And arguably they're not great managers of funds. So, sorry, you want to say something?
Yeah, no, I was just going to get to the nub of the question, and that is that if setting up more medical centres, does that create another layer of bureaucracy and another layer of...
Potentially it does, yeah. But the question is, I guess the question is about what does that mean for incumbent companies and new companies? Well, let's see. You know, we don't know. I'd be speculating if I made investments based on that decision. Explain to Sean the intrinsic value of Nufarm is currently $3.04, rising to $5.22 next year and $6.40 the year after. The share price right now is significantly above that. It's a business that, in terms of quality and performance, I wouldn't regard it as an A-class business. It's more a B-class business, and it's probably been a B-class business for the last 10 years. So one, I don't think it's profitability and profits are stable. I think they're difficult to predict. The quality is not so good, and it's expensive. So for me, I wouldn't have bought the shares, but that, of course, is not a recommendation for Sean to go and do anything. He just needs to take on my opinion and go and do some research. Well,
in the last couple of days, the company's launched a $250 million equity raising, which is just something I'm looking up here.
Not surprising.